Welcome to the weekly swing low. It's July 5th, 2025. Let's go through our normal tickers. We'll start with SPY, and the market is extended on a daily chart, which is to say, it is day 27 of the rally, which is relatively long. The last daily cycle topped out on day 29, right? One before that was really bearish. That was day 8, but the one before that was 25. The one before that, 23. So you get the picture. The one before that was actually 29, interestingly. So, like, 27 is on the longer end. We could still go for a few more days, maybe even a few more weeks. But you have to imagine, we kind of talked about this last update where our last that trade was here. We had closed here. That if we get, at that point, a swing high would be a close below, well, was going to be a close below 610.83. We're obviously now up here. And so to be clear, let's say Monday we saw some bearish action, right? This would be your sign that the daily cycle decline may have just started, right? We need to close below $622.43. That's the line in the sand now. Like, obviously, if we go on to make higher highs, right, like next week, then that, the goalpost keeps moving, in the bullish direction. Like, if we do something like this on Monday, etc., then it's going to be, wherever that low is. But 27 days is pretty extended. And keep in mind, we have this gap here. So if we come down like this, that's a potential area to test. If we think about the length of this rally, right? We rallied 52 points from that bottom, from this like little shallow daily cycle decline. And so if you're keeping just to take a step back, this is the second daily cycle, right? So we had this one, which was 33 days, very, very short, shallow decline. And now is a 29-day rally, and now we've had a 27-day rally, and so this one rallied 52 points. So a 52, excuse me, a 50% retracement would be a drop of about 26 points. What do you know? Isn't that crazy? The coincidence, right? So if we drop down and fill this little gap here, and mind you, there's an even bigger gap down here, that would be almost an exactly 52% retracement. Or excuse me, 50% retracement. That's not a coincidence. And that's not to say markets have to retrace 50%. They don't always. Sometimes they do more. But like that would be natural and healthy, not something to be concerned about if we saw several down days, a little downtrend develop. So that's really helpful, that confluence there. And it's the same story for the other indices. We'll go through them. Obviously, the levels are different. But if we think about the weekly chart, we're on week 12. And again, just to be clear, we're at all time highs. We're at price discovery. But we're also on day 27 of a daily cycle. And so we probably have a more durable price discovery mode on the next daily cycle advance. So you imagine, again, going back to this daily chart, we get some kind of little downdraft, something like, maybe we even continue up a little bit, but then we get something like this, fill this gap, and then we do something like this. That should be your more sustained move above all-time highs, and maybe that higher low even comes right around where this previous all-time high is, right? So like, I'll just to like you could even imagine a world where we do something like this, 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 right? Like, say we do something like this, right? You could see a world where this area becomes support on later rallies, right? We dip all the way down here, then we slingshot back up, then we come back down, retest this area, go back up. Maybe we don't come back and retest it. Maybe it's something like this. These are not predictions, just speculation. This is what we're going to see play out. But short term, you want to be really mindful of a swing low on the daily chart. On the weekly, the big question is going to be, will this daily cycle decline also be a weekly cycle decline? That is the most important question, because then it tells you how severe the daily cycle decline is going to be. And again, that gap that we have, the big one on the daily, also exists on the weekly because that gap happened on a Monday. So just be aware of that. That's all the way down at 575. In terms of the weekly chart, we would have to close below $615.04. So call it $615, right? So just to be clear, something like this to have any indication that the weekly cycle decline is starting. So when we get that daily cycle decline, you want to look, we're going to be watching to see what does that do to the weekly chart. Do we find ourselves, I would guess we pull back to like down here somewhere, right? Like imagine, it doesn't have to happen all in one candle, but we retest this area at the very least. So that's what we'll be watching for. And, big picture, as we've been talking about, look at this monthly chart, right? Like it's impossible to truly say this was a bottom until we get to until we got the all-time high, and we obviously got that. But as you're looking at this chart this whole way through, as we've been talking about the last 5, 6, 7 weeks, this was the sign of a long-term bottom, which means you would expect we go on to make a higher high, which we have. Now it's just a question of playing it tactically, making sure you don't buy right as the daily cycle decline begins, and you're watching for that. But I mean, this wick, look at that thing. In hindsight, it looks so obvious now. And we're going to get something like this in the future. Again, these things happen. You want to make sure that you have the courage and the experience to buy at the right times, and most importantly, not sell at the wrong times. So for QQQ, similar kind of story. For Qs, that daily chart, that level on the daily is $553.18. A close below that would be a daily swing high. But no reason we couldn't continue to make higher highs next week. We're just, it's later in the weekly cycle, or excuse me, daily cycle. And for the Qs, that weekly level is $544.66. But I mean, look at this chart again. Just look at that chart look at the Qs, man. Beautiful chart. And that bottom month, that April bottom, actually ended up being a green hammer. Remember, SPY was still red, so the Qs were kind of leading the way. So that's the QQQ. And if we look at the ratio of QQQ to SPY, also important to note, made a little daily swing low on Friday. Look at that little gap even. So that's important. You want to see that to confirm that the rally is still in play. Again, we could get a short-term pullback, but remember how shallow that last daily cycle was. What about the Dow? So the Dow is in a slightly different place. Let's look at the Dow to SPY ratio first. So the Dow to SPY ratio, we talked about this, I think, last time. It's actually starting a little uptrend on the weekly chart. So we made a little higher high last week. So the Dow is coming on strong. Let's look at the Dow itself. So that's this DIA is the ticker. So the Dow for the Friday candle, that's a low at $445.57. So you want to watch that to the downside. And on the weekly, you want to watch $438.66. But the Dow is kind of playing catch up here. What about IWM? So for IWM, that daily level would be a low below $221.77. And on the weekly, that would be below $214.15. Again, of course, these move around. And the big money can be made in, I would say, stocks, like individual stocks outside of these names, but this gives you a good sense of where the broader market is going. And keep in mind, IWM still hasn't made a higher high yet, whereas SPY and QQQ did, and it certainly will. It's going to play catch up. So still has another like 20 points to the upside. You can see on this monthly chart. So think of this as a little preview. Like think of this as your catch up trade. Remember how obvious it seemed that SPY was going to make that all-time high? This is a similar thing. In this case, we even dipped back into this range that we had been in for this long time, which is what this consolidation box sort of drawing is. So that's IWM. What about IWM versus SPY? So that's important. It's green for the month. Hasn't been green for the last, basically all of 2025 have been red. So the ratio of IWM to SPY is now green for the month of July. So IWM is waking up relative to SPY. That's important to know. Still kind of consolidating on the weekly chart, right? But, this is a base, right? This is a base that could serve as a launching pad. So that's important to keep an eye on. TNA is the ticker that you can play the small caps like through leverage. Of course, that's showing all the same patterns as IWM. All right, let's move on to semiconductors, SMH. So for SMH, uglier candle on the daily, right? A little shooter. So the low of that candle is $282.31. And also watch for false breakdowns below that level and recapture. That's a really important. That's definitely an actionable signal. On the weekly, we actually did form a little bit of a hammer. The low on that weekly candle is $272.16 that you want to be aware of. And again, just not to belabor the point, but this one actually topped out back in July 2024. So this is just month 3 of what is looks definitely like a new long-term cycle. Look at the last long-term cycle, the big rally we got. Doesn't mean we get the same thing from here, but you have to imagine we're going to get something out of here. It's going to come with higher lows along the way, but we're still relatively early. Anyone that's getting super bearish about long-term top in place, they're not looking at these long-term charts. Or, I mean, I will, whoever, everybody has to make their own judgment. But I mean, there's nothing bearish about these long-term charts. Let's look at Dixie. So Dixie declining in the weekly cycle. Last week was week 10, trying to form a little low here. So it formed. So if next week can close above 97.42, we'll actually have a little weekly swing low, and that'll be a little weekly swing below this low back here on week 30. That said, week 10 would be very early for a weekly cycle low. And so I suspect this is just a pause. And the real test will be if we try to test the low from here from the upside. So that's $97, 97.92. So imagine, price tries to get back to 97.92. That could become an area where you look to get short. Obviously, we'd have to see a swing high on a lower time frame to confirm that. On the daily, we do have a little swing low in place as long as it stays above 96.95. So you want to watch that. The thing is, looks like we're still in daily cycle decline. So this may be a little higher, lower high, right? Like you can see this line here. You can imagine a couple of candles, bumps its head here, and then goes on to make a lower low. That would be my expectation. So that's Dixie, and it looks like it's in a longer term cycle decline. This is month 24. It's trying to hang out green so far. Still have a lot of trading to go in the month, obviously. So that's Dixie. Moving on to the US 10 year. So the weekly printed a nice green hammer on week 13. And so as we called out in the last update, this is all just consolidation inside the range of this candle from April 7th, that April 7th, the bottom for the stocks and markets in general. Big swing low weekly candle by closing above 4.26. And where do we find ourselves here? Where was the low for this candle for this week? It was 4.19. So we dipped below that 4.26 level, but then we bounced right back up, right? And also importantly, we didn't get down to 4.12, which is this higher low here from the earlier consolidation within this range. And so we're kind of tightening, right? First, we were consolidating inside the range of this candle. Now we're kind of consolidating inside the range of these 3 candles, right? So like above this low here, but still within this high. And so, or within this high, call it, right? And so you can kind of see a new range like right there, right? So something like that becomes our new range, right? Like our new playground. So high of 4.52, and it would have to hold this new low of 4.19. But this all looks like a weekly cycle decline, right? After a top on week 7. It's just kind of gentle is the important thing, right? Like it's declining as in a gentle range. Importantly on the daily chart, we have a nice little swing low in place by closing above 4.28, right? Is that right? 4.28. And so that looks like a new daily cycle in play here, right? After a long, yeah, so that's important. So that's interesting because that would suggest that we're going to try to test the upper end of the range. I mean, this hammer candle also suggests that, right? Like like what you generally see after a hammer is something like that, right? Like a follow-through candle. But again, 4.52 could act as a ceiling. So you want to see how price tries to play inside that range. So that's the US 10 year. And on the broader chart, monthly chart, this is all just consolidation inside the range of the April candle, that big bullish candle on the weekly, turned the April candle into a red doji, right? and the range on that candle is 4.59 and a low of 3.86. So we're just playing inside that range, which is inside another range. So we're not doing a whole lot on this. That's the 10-year. Oil weekly printed a little green candle. That's because of we're trying to form a little swing on the daily. So by closing above $66.39, that forms a little higher low on the daily chart. So you want to watch that level. This all has the makings of a bull flag, or excuse me, of a bear flag, right? Like after this big decline, we're consolidating here. I suspect before another lower low. And if you look at the monthly chart, right, this is all consolidation inside this big wiki monthly candle. The low for that candle is $61.55. So as long as we're above that, you can't get too bearish, right? We're really just trading inside a range. A no touch for me, really. All right, TLT. So TLT, we talked about maybe this was some kind of really early weekly cycle low on week 18 back in the week of May 19th. And that's because it remains above $85.48. And so that would mean that we potentially just closed out week 6. But last week was a red shooter, and we talked about this. This thing loves to back and fill, and so we've had this like really choppy move up, but it's also been right like so we're at day 28, and we have this high on day 26. That could be our daily cycle high, right? The low for that candle is $87.66. As long as we remain below that candle, which we are firmly below it right now, we have a daily swing high in place. I mean, as you can see from the previous price action, there have been a lot of swing highs. Like that was a swing high, that was a swing high. So we've survived a lot of swing highs, but this is relatively late after this move. And so it could be that this is kind of front running the daily cycle decline of the broader index, or the indices, I should say. So that's TLT. And that could mean, and again, that's consistent with the idea that this is some kind of really early weekly cycle high, or weekly cycle low, excuse me. That's TLT. Let's move on to Bitcoin and crypto, and then we'll close out with gold. So crypto, we talked about this. We've made a lower low on the daily chart, which is not auspicious, right? Like this low here, but could also be fuel for a move. So how many days are we removed from that low? We're day 13. So optimistically, this is day 13 of a new daily cycle. That would be the really, really optimistic count. I think the weekly is more important to look at. Look at this consolidation since the week of May 19th, right? This puts us at week 12. So plenty of time for us to go on and break out of this bull flag here. But you got to hold above 98,225. Like that's your big line in the sand. I would because this thing trades all day, all night. You look at the 4-hour chart. That gives you a more actionable real-time level. Look at this, very clear. We had this big rally up, and now we're trying to hold a higher low up here. And so your first line in the sand, like really, if you want to keep this thing tight, is 108,000, basically. That's this low here. And then below that, you have 106,000. So you could play a false breakdown of this level, especially if it holds above this level. That's golden, or conversely, or similarly, a false breakdown of this level, as long as it kind of holds above this. Obviously, at that point, you break down below this level, this is a long way down. Whereas I really like this, a break of this holding above this is very actionable. So that's Bitcoin. Still, I think we're still advancing in the 8-year cycle, and so I think we still have price discovery mode ahead of us. I'm thinking probably 150,000 is what we have at the top. That's not a prediction, just spitballing an expectation. For ETH, very similar kind of action here. So for ETH, your actionable level you got to stay above is, it's pretty down there at 2113. So a lot of distance there. But more proximately, we have a doji candle for the weekly, and that's a low at 2372 and a high at 2637. And so that gives you your kind of range that we need to stay within and ultimately break out of. I mean, look at all these wicks, right? When this thing finally goes, it's going to explode. Because look at this frustration, right? Like, of people, imagine you buy up here or here or here or here or here. Price just kind of reverses on you, and it's just kind of sloshing around here. So that's ETH. Okay, gold. Gold is actually also consolidating. I think we're in a new weekly cycle. We've been talking about that. Miners certainly made a higher high already, right? Like we topped out on week 16 here, made this lower low, and now we're just consolidating. The trouble is, if we are in a new weekly cycle, it's already week 8. So we're wasting a lot of time. And we have this technically this weekly swing high. Or it is a weekly swing high, right? Like as long as we remain below 33.40, that is a weekly swing high right there, right? And this high is a lower high than this. So that's not awesome, but that also makes it super actionable. 33.40, right? That's gold on your weekly chart. And on the daily chart, the other good news, we're above a daily swing low. So that's above 33.09, right? Like above this candle here. So we just closed out day 4 of a new daily cycle. So that is helpful, right? Like that would be right in the timing band, right? Like that would mean that this was a 30-day cycle, right? So on the daily chart, you have this bearish outside candle on Thursday. That was the day before July 4th. And so that makes things really simple. The range of that candle is a high at 33.65 and a low at 33.12, call it. So those give you kind of your levels. False breakdown would be a beautiful thing, like below this low here and then rip up. So far, Friday was just an inside candle, and you're probably going to be inside the range of Friday even. And that was a high of 33.45 and a low of 33.24. So that's gold. Let's see, and gold is marching up to the 8-year cycle high. So similar to Bitcoin, they're both marching to multi-year highs is my expectation. Silver is higher than it's been in like over a decade. That's really helpful to know. Look at this. This was the 8-year cycle low for gold. Silver's finally getting some momentum out here above these highs from 2020, like appreciably above. But more important, in this kind of area here, testing, like, teasing out, a move to 50. But in terms of the short term, we're just consolidating this weekly like kind of bull flag. So you really have to hold above $35.42 on silver and watch gold for your signal. When gold blows, silver will as well. GDX. So GDX trying to form a weekly swing. It's got to close above $53.74. Similar to gold, I think we're early in a new daily cycle. So Friday was day 4, and that was a close. By closing above $51.12, that formed a daily swing low and started a new daily cycle, is my suspicion. So Monday will be day 5 of a new daily cycle. So that's bullish. What does that look like for silver, right? So that would mean, so for silver, interestingly enough, that low was not a lower low, right? Like gold and GDX made a lower low back on June 30th, back on Monday. Silver held up. That's important, right? And that's a low at $35.42. So paying attention to that there. So that's silver. And let's look at platinum, and then we'll look at natural gas, and we'll close out with uranium. So platinum has started to stall out. We made a high back on June 27th. And if it closes below $1,110 approximately, that will make that day a swing high. So I'll just draw a line here, right? So imagine a close below this line here. That's what you want to watch for. We've been running for a really long time. Oh, excuse me. Apologies. That's actually palladium. So disregard that. The level on platinum would be a close below 1346. Right, so below this low here, below the low of this candle. This thing has been running for at this point, from this low to that, we're on day 63. So we are super extended. That's important. But I think this thing has broken out long term. Just be careful not to buy the local top. Natural gas, a red weekly. Looks like we're in daily cycle decline. Not looking great on this one. So for this one, it tried to form a swing low by closing above 33 spot, 3 spot 36 and couldn't do that. And now it looks like we're going to test that low at 3 spot 19 would be my guess. And on the weekly, importantly, we formed a weekly swing high. Oh no, that's not good. So by closing below 3 spot 52, we formed a weekly swing high, and very likely our weekly cycle high on week 8. And so we're here on week 10. That's not great. And this is a pretty bearish weekly cycle wick. We didn't really go anywhere. We just kind of consolidated, almost like a bear flag of this decline here. So that's natural gas, not something that I would jump into here. So looking at uranium, URA, let's look at CCJ. I don't love the fact that this thing looks super extended, right? This is week 12. This thing generally tops out around week 11. You can see the previous weekly cycles, week 11, week 11. So the low for last week was $70.68. I want to watch that. That's important. On the daily, we are sitting above a little swing low. So by as long as it stays above $72.31, Friday is forming a little swing low. So that becomes your pivot point, your line in the sand. That's CCJ. The ETFs, etc., are doing a similar thing. But keep in mind, we're early in a new long-term cycle is my guess here. We're just consolidating at the upper end of the range. And so this is one to keep in mind, maybe even buy in a little bit, very small position size so that you're able to kind of keep tabs on it. But I suspect we're going to get into more serious price discovery for this guy and the uranium sector as a whole. So that's the whole update for this week. I'll also release one with some specific micro caps and other stocks that are, looks like they're breaking out of, either a long-term base or they just made some kind of long-term low. The market is ready to rip. After we get this pullback, this daily cycle decline, we're gonna rip to price discovery, and we want to be there in the names that are gonna run the most. So look out for that for within the paid subscription. Thanks for watching.